right, everybody, welcome back to another edition of Dr. Stocks and Market Talks with Dr. Stocks. Why do I always get that wrong? This is Dr. Tom Carr, aka Dr. Stocks, coming to you live from the trading room of drstocks.com, drstoxx.com. If you want to trade with me throughout the day and a huge community of really, really fun people to hang out with throughout the trading day of all different levels, you can click on the live trading button on our website. If you want to learn how to trade, click on the webinars button. If you need a trading system, click on the manuals button. And if you want to subscribe to one of my award winning newsletters, you can click on subscribe. All right, let's get down to business. I'm going to do several things today with you all who are watching. I'm going to introduce a new indicator on TradingView from a friend of mine who put it together. I'm going to go over to Twitter or X.com and show you some good follows, people that I think have good information and good insights in the market and who are worth following on Twitter. And then third, we're going to go over to the charts and look at some of the charts. I've got that indicator that I mentioned. We'll look at that thirdly. Let's start by taking a quick look. Let's take a quick look at the overall market itself. So it's a down market day, and it has been fairly red. You can see from the heat map over here, all the stocks in the S&P 500 are listed right here, and it is a majority red day. A handful of stocks, including Tesla, which just seems to go up every single day. Google's been doing really well as well lately. Apple's been doing well. Microsoft is in a nice strong run, although it's probably petering out, as are the others as well. But you can see majority of the stocks are red, majority of the sectors are red. It's a falling tide lowers all boats kind of market today. A couple of insights into the breadth of the market. So this was up around 72%. That was the highest I saw of it. How many shares are falling today versus shares that are rising? When you get up to about 80% on an intraday basis, that's typically the kiss of death for any uptrend or downtrend. So if a stock market's going up and it hits 80% of all the stocks are rising at that moment, that's pretty much almost guaranteed that that's the top of the day, and it will cool off from there. And the same is true on the way down. Now, I don't know how low we got today. Maybe we hit 80% at some point at the lows of the day. I just don't know. I wasn't watching it that closely, but it is a pretty nasty number. Around 70%, the stocks are either down or flat. This is the concerning number right here. Typically in a bull market, you see more stocks hitting 52-week highs than you do 52-week lows. That's the opposite right now. So we've got a lot of stocks in the market, most stocks in the market, trading down near the lows of the year, not up at the highs of the year. And let's be honest, the stocks that are up at the highs of the year are the usual suspects, the Mag 7 and related issues, and a handful of other interesting software names and so on along the way. All right, so on an intraday basis, these are 10-minute charts you're seeing in front of you. These are real time. You've got the Dow not doing very well today. It's not the worst, but it is down at the lows of the day. It doesn't seem to be able to get off them at all. You've got the NASDAQ not too far from the highs of the day. So what does that tell us? It tells us that industrials, healthcare, energy, banks, the big drivers of the Dow Industrials are not doing very well. Commodity stocks, industrial stocks, manufacturing stocks, not doing very well. Down near the lows of the day. In fact, the Dow is printing its 9th down day in a row. I don't know how far back you have to go, but when it was 8 yesterday, you had to go back to 2018 to find the longest streak of 8 trading days of downside closures in the Dow. Now we're going to hit 9 unless it rallies back up 80 basis points in the last couple hours here of trading. We are being led lower by the Russell 2000. No surprise there. It usually leads the way higher in an uptrend. It leads the way lower when the market is falling because of its volatility. But it is off the lows and it is fairly stable right now, so that's not a bad thing. The NASDAQ, the S&P 500, as I said, not too far from highs of the day, but it's a pretty tight range. Right? Not a lot of movement, both up and down. Every little rally gets sold into, every little dip gets bought back up. We've got the Fed coming out tomorrow, and the consensus is that Chairman Powell will cut 25 basis points. It's like almost a virtual certainty that that's going to happen. The big question mark is, what will he say in his talk? What will he say in response to questions at the presser? Most people are wanting him to say that, yeah, we're going to pause for maybe 2 or 3 months, and then we'll start to pick up again. And maybe every other month we'll cut a quarter. And the market would like to hear about 3 more 25 basis point cuts by the end of 2025, i.e., a nice slow return to a lower interest rate environment in a way that doesn't spur inflation again, but in a way that also doesn't keep interest rates too artificially high when we've got, maybe a little bit of softening in the labor market, maybe a little bit of slowdown in the GDP. So we don't want to see recessionary fears kick in, but we also don't want to see inflationary fears kick in. And if you've got both kicking in at the same time, you've got stagflation, and that's just the worst of all possible worlds. So the Fed is balancing this tightrope right between those two things. And the best of all possible worlds would be a pause and then 3 more cuts spaced out over the year. That would be a good thing. So if Powell hints at that, I think the market will rally starting tomorrow afternoon and then rally off and on, mostly up, not every day, but mostly up into early part of January. That's my path of least resistance, and there's no guarantee that's going to flush itself out. It has a lot to do with what happens tomorrow, but that does seem to be the most likely scenario. All right, so a couple of things I want to do with you. I first want to go over to Twitter and show you a few folks who I think are worth following. You don't have to take my word for it. You can kind of look at some of their posts and see if it's something that you find helpful. Of course, I'm on there, so you want to make sure you're following Dr. Stoxx, DrStoxx. Dan Ives is I don't know. I'm not even sure I would recommend Dan Ives. He's on CNBC all the time, and he's just always pumping Tesla and Apple and Bitcoin. Nothing wrong with that. I mean, those are 3 very good places to have money in the market right now. But he's just like a perma bull on all 3 of those, and maybe some of his claims are a little bit on the outrageous side. In addition, his jackets are always outrageous. The way he dresses, very outrageous. Anyway, I do follow him just because I'm interested in hearing his point of view on those 3 industries. Financial Juice is a good follow. It typically gives you headlines, things that are breaking news throughout the day. If you see the market moving up or down really fast, it's usually in response to a headline, and Financial Juice would be a good place to go to see what was that headline. What is it that's causing the market to fluctuate so quickly? Financial Juice will usually give you that. It also is a good source for the economic data that comes out before the bell, for earnings, and so on. TrendSpider runs a charting service, and they often keep track for us of certain technical setups, and they'll post their charts here. That's a good follow. Bullflow.io. I can't really recommend them at all because I don't know their track record, but they do often draw important attention to unusual call and option and put flow. StockTwits, of course, is on there. Jim Urio is a good follow for his insights into the bond market. Trueflation for their insights into inflation. They have their own sort of proprietary way of measuring inflation. It tends to usually be a little bit lower than the government reading, and it may or may not be more accurate. I don't know, but it is interesting to keep track of what they're saying. I like following the Kobesi letter. It is very I'd say leaning bearish almost all the time. So they're always looking for that, the critical problem in the market that's just going to cause it to crack. And they're talking about the yield curve, and they're talking about bonds being down in the dumps, and on and on. But what I like about them as a follow is that they'll draw your attention to things that you might not have known about before, and they do it in a way that's very detailed and easy to understand. So it's a good follow for people that want to keep up on economic data, economic trends, and Yeah, so I would recommend them. I follow a whole bunch of IBD people because I'm an IBD partner. So anybody related to IBD that's on Twitter, I follow them. Don't necessarily recommend all of them. Let me see if I can find a few more. Walter Bloomberg, also another good source for economic data and for headlines. Elon Musk, of course, you got to follow him. Anybody with a CMT after their name, I tend to follow. And if they give me reads that I think are outlandish, I'll unfollow them. But just about every CMT out there is a good follow. They are the chartered market technicians. So these are guys that they typically work for an investment house of some kind or a hedge fund, and they do technical analysis. So you get some really good charts out there, and they might signal, a setup that you wouldn't have noticed otherwise. So, here's a guy, David Keller, talking about a bullish alert for NVDA, but only on a break above 150. Everything below that, below 132, is more of a bearish trigger. Cheddar flow is good for dark pool prints of these large off the exchanges of shares that take place typically on either a large stock or one of the indexes. And when the price of the dark pool print is far away from current price when it happens, that can be a interesting information. We don't know if it's a buy or sell, but it typically means someone's either trying to get into the market really quickly or get out of the market, and there is a tendency of current price to rise up to a higher dark print price or down to a lower dark print price. They also give you information about calls and puts and that sort of thing. Zero Hedge is good for economic data. I don't always understand what he's talking about. And sometimes it's a little bit clickbaity. He wants to jump over to his site and then subscribe to his services. But he's a good follow. You'll get some good information from him. Let me see who else. There are Unusual Whales is very good for following unusual buys and sells of hedge funds and large market players. Let's see. Bespoke is good for sentiment data. So typically they do other things too, but you'll usually get a pretty good read on what the overall sentiment, bullish or bearish, is on the market. And they're very good at contrarian indicators. Bespoke. Let me just do a couple more here. Jesus, Wall Street Jesus is very good for options data, unusual option flow, unusual put to call ratios. He's very good at that. He posts quite a few times a day. And let's do Charlie. Charlie Bilello is a professional money manager and very, very good at giving us economic data in the form of charts. So you're going to see like historical price data, historical EPS data, historical overvaluation, undervaluation. That kind of data is his specialty. All right, so that's just a few follows on Twitter that I can recommend. Some are better than others, but you'll have to sort through that yourself. Let's jump over to TradingView, and I want to introduce you. Let's go to the indexes first. I want to introduce you to this new indicator. What are we on? Daily? Yeah, unfortunately, the futures data are not going to be good for the indexes because they had a rollover overnight, or I'm not sure what it is, but all the indicators. Why is that showing green? Yeah, this has something to do. Anyway, we know that the indexes are down today. The futures indexes are showing green and a big bump up, a gap and crap kind of thing, but that's not the actual index. This is what the actual index looks like. Something to do with rollovers, and I don't know what else. You can explain to me why the futures, the micro E-mini futures for the S&P and the Dow are higher today when in fact the underlying indexes are lower. So here's the this is ugly, isn't it? Yeah, this is why that's not a very good representation. Let me see what else is going on here. Hold on, hold on. I don't know if my chart got messed up. All right, well this is okay. This will do. So this is the small cap index, right? IWM Russell 2000. You can see it hit a double top. It is a soft pullback almost every day, going a little bit lower, rather a painful slide almost the whole month, 3 or 4 weeks in a row, all the way down to the rising 50 period moving average. We're getting pretty close to the pink zone of the rising LRC, which is usually a place where you want to start buying, start nibbling on things. Um, and and we are, of course, deeply oversold in stochastics. That's the indicator I have down at the bottom. This is the new indicator. It's not really new to TradingView, but it's new to me. It is a relative strength indicator that was built by a guy that is in my pro trader group. And I am not so sure that it is all that helpful, but just as a pure quick visual, you can see that when it is green, the RSI indicator is above a moving average. That's the black line. When it's red, it's below that moving average. And of course, green is a bullish period and red is a bearish period. So right away, you've got a quick visual of near-term price momentum on a relative strength basis. And this is, by the way, relative to the S&P 500. You can put in whatever index you want. You can put in the NASDAQ 100 or the Russell or whatever. But I use the S&P 500. The moving average is, I think, a 21 EMA, which is a good number to use. I would just use that default feature. And whenever you get a bullish crossover, so from red to green, you get these little blue triangles down here underneath the indicator that tell you that's a bullish transition from bearish to bullish. All right, so just that in and of itself might be helpful in some instances, but this is the feature that I really like. So if we go back here, you're going to see, I don't know if we can find any green circles, but you will see these pink circles right here. This is, although I have to say, none of the three pink circles there worked out very well for the Russell, because not too long after you got those, it got slammed right back down. But here's the thing. You get those pink circles when the relative strength indicator is rising ahead of price. So when the relative strength indicator moves up, but price either moves down or flat, you get a pink circle. And you only get those when it's in a bullish mode. So you've got a bullish mode, relative strength is moving up, price itself is flat or moving down. And that's a bullish divergence that can be flagged right here. And the thought is that when you see that, you are very close to a breakout move. I did find some that really did give that signal quite nicely. Let me see if I can find them again. Okay, let me go through my greens index because I think I have a few on here. All right, so here's a pink circle for VRT. It did come at quite a little price high. It was a little pivot down lower, but that did signal a nice move higher. This one also initially down and then much higher. This one, a nice pocket pivot right there. Very beautiful pocket pivot. The 3-bar reversal right off the pink zone. So this is what I'm thinking. If you've got a technical setup that you like and you get the pink signal, it could be an additional confirmation that might indeed be helpful getting you into that trade. Otherwise, I'm not so sure it's all that helpful. Let me see if we can find some other instances here. These are all the stocks on the from all of my various scans that I'm interested in either buying or waiting for a buy signal. Most of them have not triggered buy signals at all. So we're still in waiting mode. Let's see if we can find some other. Here's a pink signal far back here. That looks like a nice looking pocket pivot. Big price upside, good volume, and it did go a fair bit higher after that. Not altogether higher, but Here's a good one, right? Nice little price consolidation, 3 or 4 bar price consolidation. You get the price signal, and that did flag, in fact, a very, very nice move upside in app. Here's a pink signal that went upside for a little while. PLTR gave a pink signal just a few days ago. How about that? Right here, not yet at 52-week highs, and it's only gone a little bit lower since then. So that might be a signal to watch. We are long APO, of course. It's banging up against a resistance, but I don't see any pink there. Snow, there was a pink signal just prior to that big breakout on earnings. See that just the day before earnings? Boom, right back up. Here's a couple of pink signals, one before earnings, one after earnings, both of which panned out quite nicely for higher. Here are the banks coming down into the pink zone, but not much in relative strength. Here's your equal weighted S&P 500 down at the lows. Just a lot of ugliness out there, I have to say. So anyway, I'm not going to belabor that. If you are interested in playing around with this indicator, I will put a link to where you can find it in TradingView in the live trading room. All right, enough about that. Let me just take this off because I think it's a bit more of a distraction. And let me show you a few sectors that are of a concern. So we've got the small caps, as I said, down to the 50-period moving average. We really want to see small caps catch a bid. Yesterday looked quite good. Very good volume. See the volume down here? Well above average, and probably the biggest volume stick since late November. And it was really a very good looking reversal bar. We stayed off the lows of the previous day. That would be Friday of last week. We all got all the way up to the 21-period moving average. Couldn't quite hold those highs, but it did close a fair bit higher than Friday. Looked like we were getting off to a good start of the week, and then it's a gap down and not such a good price action today. The good news is that we're off the lows. We're still above the 50. Everything is still uptrending. You still have the nice stacked MAs. We're waiting for the small caps to kind of get back on track. And they should, especially in a falling rate environment. Banks, we've got XLF down into the pink zone after 7, 8, 9 red bars, lower bars out of a couple of weeks of trading, 2 or 3 weeks of trading there. Not showing any relief just yet. Now, the good news is that we are still above the big election gap, right? You're going to see this in a lot of sectors and indexes, a big gap up on election that carried higher, and now we're back in consolidation mode and in falling mode. And it is forming the potential of a nice little wedge. Wedges are not bullish until they break out. We're not in breakout mode just yet, but we are in a place where typically we start to see price get bought back. So I'm waiting on banks. I would like to get us into FAS. You're going to look at KRE, which is the regional banks, pretty much the same thing, although this is a big red stick today. Not a very good look today. I fell out of that nice little, very orderly price channel on the pullback, but everything's trending. MAs are still stacked. We're still above the 50. The 50 is above the LRC pink zone. All kinds of good things can happen. We just need a better rate environment for these banks, especially the small ones. XBI, which is the biotech sector, starting to show a little bit of promise here. So we're in Labu, right? We're a little bit above where we bought it yesterday, bought it early. And we've got oversold stochastic starting to curl higher. We've got a potential move up and out of the pink zone. Bit of follow through today, but it's not a very robust follow through, I have to say. But at least it's not a red bar, and it's not lower than not too much lower than yesterday. So that's good. A flat close today on a day when the market is mostly falling would be pretty good for biotechs. Utilities still in a world of hurt, and now we are below some price support. It can bounce right back up and trap the bears on the downside. Utilities still have a lot of value because of the increase in energy expenditure for AI. As long as AI is going up, we should see utilities do okay. but I don't know. The market is just kind of pricing in right now. In the last several weeks, been pricing in a lot of worry in that whole space. And you'll see NVIDIA showing the same thing, right? Down, down, down. This nice ABC pullback. Potentially, this is the break of the neckline of a inverted. I'm sorry, not inverted. A head and shoulders top. But as I say often, that is a rather unreliable trading pattern. We are fairly well below that neckline, but the um, the the pattern target is down here around the 200 period moving average, somewhere between 120 and 118 or so. And it does seem to be moving in that direction, but I think there's a fairly good chance. I mean, we bought a little bit of NVDL this morning on the dip, and I think we're back up above our entry price. There is a pretty good chance that that is not, in fact, a falling uh, head and shoulders pattern, but rather we are coming into the apex of a wedge. Now, wedges aren't bullish until they break to the upside. Rising wedges are bearish, but only when they break to the downside. So we just have to wait on this one. We're just playing a little bit of a bounce. It's NVIDIA, hoping that we can trap the bears tomorrow on the FOMC. If not, we'll have to get stopped out. So that's NVIDIA. The semiconductor index is getting tighter and tighter. It's a very good thing because the longer it gets into this consolidation mode, the bigger the breakout. This is a very long consolidation. You can see how tight everything is, right? The 21, the 50, the 200, they're all in proximity. The LRC is starting to flatten out a little bit. It was in an uptrend. Now it's starting to flatten out a little bit. And we're just waiting. We're just waiting on the semiconductors to get back on track. Avgo, Broadcom is way up there, but it's the only one. The only one of the major semiconductor plays. Everything else is down near not 52-week lows, but relative strength pretty low, and maybe in the last quarter or so, down near lows that we haven't seen since June or July. Okay, there was one other sector I wanted to take a look at, homies. So this is, of course, a very rate-sensitive sector, and the home builders, which have all kinds of value and all kinds of amazing growth, because, hey, we're here in Florida right now, and they're building homes like crazy all over the place. So there's still a very good market for new homes, but um, I don't know. I'm not exactly sure whether this is higher mortgage rates and people aren't applying for new mortgage rates, or building permits are getting stacked up, or who knows what. But home builders are having a tough time. So we are just over the 200 period moving average. We're at the very bottom of the LRC 2.0 standard deviation, away from the midline up here. We are at the place where we typically see, and look, we're also at some good price support. Support right there, resistance right there, support right there. That's actually a very, very clear line in the sand. Yeah, that's really amazing. So this should be a hold. We should see a reversal tomorrow, and then some upside bounce into next week or so. But it's not happening yet. And these kinds of things, right? The Dow, I think we looked at the Dow. 9 days in a row, right at the 50 period moving average, at the lows of the day, sneaking out just below the LRC. None of these are buys yet, until we start to see the bulls come in. Yeah, okay, I'm not going to kick anybody in the pants for nibbling on some MYM or UDOW down here. But to be safe, we want to wait until today's high is taken out, or it gaps up into that open gap right there and holds. If we can get back up to 437, 438 and hold sometime tomorrow after the Fed, then this has a pretty good chance of printing that bottom and moving higher. But we're not there yet. Same with the small caps, same with the utilities, same with the home builders. We're just not there yet for these sectors. All right, guys, that's about all I have for today. So I'm going to shut off the video, and then I will take some chart requests, and we'll go from there. We'll get back in the room in just a little bit. I won't take too many chart requests today. Don't have much time, but we'll take a few. God bless everybody. See you back in the room in just a little bit. Bye for now.